Okay, kiddos, Section 3 in Chapter 5 is kind of a catch-all for kind of random transactions that happen when you have a checking account. We're going to talk about recording a dishonored check. We're going to talk about electronic funds transfers, and we're also going to talk about debit card transactions. So let's get started. The first one we have is something called a dishonored check. And a dishonored check is simply a check that a bank refuses to pay for whatever reason. Typically, the most common form of a dishonored check is a non-sufficient funds check, commonly referred to as an NSF check, non-sufficient funds. And simply what that is when a non-sufficient funds check is brought to a bank, it's realized that the person that wrote the check has insufficient funds in their account. So you might have wrote, can't talk. You might have written a check for $20, but you only had $10 in your checking account. That would be an example of a non-sufficient funds check. You couldn't cash, the person you wrote the check to couldn't cash it because you didn't have enough funds in your account. So banks can dishonor for several reasons also, in addition to having an NSF check. So some of those reasons might be that if the check appears to be altered in any way, like someone added a number, someone changed the name to who it was written, etc. If the signature of the person who signed the check doesn't match their signature card that you fill out when you open your checking account, that could be a reason that they dishonor it. If your amount in figures, meaning where you wrote the amount in numbers, and the words that you wrote do not agree, that could be an example of where they refuse to cash the check. Again, if the check is post-dated, mean that it's written for a date in the future, or if the person who wrote the check had to stop payment. All that means is that the person that wrote the check decided to put a stop payment on it. For example, my husband and I both ended up paying the same bill. So we each wrote separate checks to the company. And so one of us had to put a stop payment on one of the checks. And so that's just what that happens. We clearly didn't do a very good job of communicating that day. So those are some examples of where banks may dishonor a check. So to record that, we record it in that other section on our check stub, the one same place where we record service charges. We can put a dishonored check there as well. So we write dishonored check under the heading as listed here. We write the amount of the dishonored check, which was $225, and then we calculate our new subtotal. So remember, dishonored check means that it didn't go through, so we are subtracting. So sometimes money from a dishonored check can be collected directly from the person or business. However, most often, the value of that dishonored check can't be recovered and ends up turning into an expense of the business. And that's what usually happens. And so you have to remember what's happening in this situation is that, let's say, for example, someone had bought something from you on account. So they have an accounts receivable, correct? And then they end up paying you, and you get a check, and you record that check as if they have already paid you, so your accounts receivable goes away. A few days later, you bring that check to the bank, only to realize that that person doesn't have sufficient funds in their account and the check can't be cashed. What do you do? Well, what happens is the company is going to receive a notice or a memorandum that it received a dishonored check. Okay, and all checks received are deposited into the checking account. Okay, so typically what happens is if you have cash receipts, you get a debit to cash. And so we obviously have to take that money back out of our account because we didn't actually get it. So that's where we have to credit cash. And then that person technically still owes us money. We never got that money. So when we originally had credited that accounts receivable, we now need to increase that accounts receivable again because those people still owe us money. So when we journalize a dishonored check, here's our transaction. It says on August 29th, We received notice from the bank of a dishonored check from Valley Landscaping of $185 plus the $40 fee for a total of $225, memorandum number 52. That $40 fee gets charged by the bank for trying to run an NSF check. And so as a business, you have to pay that and then hope that Valley Landscaping will write you a new check for the total of $225. So again, what's happening here is our accounts receivable is going to go up again because we didn't technically receive that money. We're going to charge them the $185 plus the $40 fee. And then we need to credit our cash because remember, originally we had debited cash, like we received that amount and we did it. So we need to credit it for the $225. So what that looks like in our journal is we put our date, we put our account title, which is accounts receivable for Valley Landscaping. We put our debit of $225. We put our credit of $225 to cash. And then we don't forget to do our source document, which is memorandum number 52. So that's how we journalize a dishonored check. It needs to go both on our check stub and also into our journal. Now, our second kind of transaction that we're going to talk about in this chapter is an electronic funds transfer. So electronic funds transfers happen when you make computerized cash payments, and simply all it's doing is transferring funds without the use of any checks, currency, or other papers. When you use online bill pay, when you purchase things over your phone, whatever it happens to be, you're using EFT or electronic funds transfers. Anytime you use an EFT, the source document that we use, because you didn't actually write a check, is a memorandum. So we're going to use memorandums a lot here. So on June 5th, it says we paid cash on account to Merniac Enterprises for $380 using EFT memorandum number 18. So what's happening is our accounts payable for Merniac Enterprises is going down with a debit. Our cash is going down with a credit. And all that looks like in our journal is just like we've journalized before. The only thing we really want to point out here is that our memorandum again is M18 because we did not write a check. Okay? Unless you write a check, you don't put a C. Okay? That's something we want to remember. And then our last type of transaction we're going to talk about in this section is using a debit card. So remember that debit cards are cards that you get from your bank, and they automatically deduct the amount of a purchase from your checking account. Okay, debit cards and credit cards are different. If you don't know the difference between those, take personal finance because we talk about that all the time. But a debit card comes out of your checking account. But you did not write a check, so your source document is once again a memorandum. So anytime that you don't write a check, you can't put a check there. You have to use a memorandum. And so they don't show us an example of that because all it is it looks like our EFT transaction. It's just, again, our source document is going to be an M something. Okay. So we're going to head over to our Mind Tap. We're going to do our 5-3 work together where we are going to journalize some dishonored checks, some EFTs, and then also some debit card transfers.